Hey traders, I hope you all had a nice weekend. So let's start this week off with natural gas. I'm going to go through crude oil and gold today. So let's start with our favorite commodity, natural gas here. So right now, finally, natural gas has given us a breakout and I was expecting a nice good move out of this head and shoulder pattern, which I've mentioned in my previous video. I've also mentioned this entry pattern, but our target was something like this, was right here. Let me quickly show you what I've said in my previous video so that we can take it from there, and so you know that how we take entries. Yes, we are still intact with the head and shoulder pattern, and here I can see, yes, we have a good engulfing candle, but according to that, so if I look the ATR of this candle, this is what it can go up to, 8.743. So according to the volatility, this is the area from where you can exit your trades, and then I will only go long if we have a good break and close above. Okay, awesome. So what do we have now after the hitting of our target? Now market is above our green zone, which we were waiting for last couple of days, and we got some nice move out of this head and shoulder pattern from here, and also we got some nice trade out of crude oil. It was a nice week for commodity and for forex market as well. Now what to expect next from here? So as you know, market is bullish. Let me pull up my EMAs now. Right here, as you can see, is above EMAs. At this point, I pull up my Fibonacci tool to the first level of the zone. So let me do it to the first level right here. So now what you can expect if the market pushes down, you can mark your buffer zones on your charts from 50% retracement to 25% retracement. So this is your buffer zone now right here. So now I expect if we have a pullback, we can expect a pullback to this buffer zone, which is 9.120. That goes down to 9.029. This is our buffer zone. Let me tell you how we take entries, and I'm going to go through currency.com as well in a moment. So now this is the target from the first level of your support. So at this point, if you want to enter aggressively, you can enter once you hit this zone, and you can take your targets up to 1618 retracement, which is 9.484. So this will be your target, but this is the aggressive way to enter. I won't enter aggressively at this point. I want to look for a retest and an engulfing candle here to see a double confluence that the market is likely to push up from here. You do not want something to happen like this. Of course, we are now above this zone, but we are still not broken above this previous high. That is why I would look to enter in a less aggressive way from here. So this is the entry from the first level of your zone, and you can see we are getting an overbought situation as well. So I can expect a pullback for the market pushes up, and as you know, we already have our zone marked from last couple of videos, which I'm going to go through as well. So now this is the pullback you can expect from the first level, and let's say if we get a further retracement, the second level, so now you will have your buffer zone below here, and that zone is 8.917. That goes down to 8.730. So if we get no entry reason from this area, then we can expect a bounce at 50% retracement at this zone before we get another push up to 9.738. I hope it's all clear now, guys. At first, we look for the first level, which is here, and the target will be 161, which is 9.494. If we get an entry reason, or if you want to enter aggressively, that's totally your decision. That is right after the hit of this zone, you can enter and take your targets right here. Let me give you one more zone here. As you can see, the zone above from where the market pushes down previously from right here, this is a minor zone that can be broken, and let me quickly show you just on here. If you look back here, so if you look back, this zone has acted as a resistance, as a support. Market pushes up, and if even if you look further down, the market acted as a resistance and a support from this zone. So that is why I want to be less aggressive for my long entries. So let's say if we get a next engulfing candle, a red candle, that will be our sell signal. But in that case, you can take your short trades right here, but the targets won't be really big at this point. 21 ATR, which is something like this. If we get a sell condition, so if we have that condition, then in that case, we can take our sell entries, and once a target will hit, in that time, we can have our pullback as well to take long trades according to our 50% retracement on our Fibonacci tool, which I've just shown you. Okay, right here on currency.com, we have a similar condition. Let me give you both zones now. So zone number one is right here, and you can mark your buffer zones right here. This is a zone you will be looking to enter either as an aggressive way or a less aggressive way. An aggressive way is right after the hit of this zone. You can set up your limit order here. This zone is 9.173, that goes down to 9.100. As you can see, we are getting overbought as well. That is why I'm expecting a pullback before we can enter the next trade. So this is our first zone, and let's say we get further retracement, and if you are taking a less aggressive entry, which is an engulfing candle, once we hit this zone, which I'll be looking at, if we do not get any entry and let's say the market pushes down, the next zone you can look for a bounce is right here, which is 8.948. That goes down to 8.795. So this is the next zone. You can expect a bounce to 161 retracement, which is 9.790. And here we can exit the trade. And next zone above we have is 11.163, which we are not looking at this point. It will take some while to hit market to hit this zone, and before that we can take some pullback trades. So right here we have a zone above, which is a minor level of resistance. Let me quickly show you why it's a minor level of resistance. If you go back and check, so right here the market bounced up and pushes down from. So this is a zone the market has reacted in the past and recently here as well. So that is why we have this zone. And let's say we have a next candle, which is an engulfing candle, a red engulfing candle, right? As we have the overbought situation in the RSI as well. That is why I can expect a push down once we have a good entry reason. So if we have a good engulfing candle, then in that case we can enter short trades right here using our 180R target, whatever the 180R, let's say it's 20, just push your position tool to 20 like this. So like this, what we can do, we can take our sell trades, and by the time we hit our target we will hit over 50% retracement as well, which is exactly aligned with our target if we have a 20 on the ATR. So if we have a good entry region, then this is a zone I will enter my sell trades, and this is the target I will be exiting my trade, and we can expect a bounce out of the Fibonacci retracement and the levels which I've marked, 1.618 retracement after a hit of 50% retracement. So these are the both conditions you have now to take your entries. Keep an eye, if we have a good selling condition we can go short and the targets will be here, and if we have a 50% retracement as explained, then we can enter less aggressively at this point to take long trades until we hit this yellow zone. Until we have a good break and close above this zone we can take further long trades. So be cautious here to take your entries. Okay, right here on gold, if you remember my yesterday's video, I've said that gold is now in the zone, in a buying zone, and we can expect a push down to 1830. Once we have a hit of 1830, we can expect an engulfing candle, something like this, or a pin bar, or a 382 candle. For gold, we can still expect to push further down to this zone. This is also a minor level of support. If we get a red and a green candle from here, then this is also a zone I'm paying attention to with a good entry reason to take my long targets using ATR for my targets, 180R above and 180R below. So let's check crude oil. So what do we have here? The exact condition we have predicted in my last video. Let me show you what I've said in my previous video so that we can connect from there. We can get a retest to this neck, to the neck of this pattern right here, which is 120. Once we have a retest, I will look for another long opportunities. Okay, awesome. We got a nice push down, a pullback to our neck right here as mentioned in my video. Now what I want to see an engulfing candle, this current candle right here. If we have this engulfing candle, this 4-hour candle engulfs the previous candle, then that will be my entry, and I will place my position tool right at the close of this candle, and I will check the ATR and I will set my targets 180R above and 180R below, only if we get a good entry candle, which is an engulfing candle. Otherwise, if we get a push down, then that's the next zone I'm paying attention to, which is 50 EMA, from where I will look for a bounce again back to whatever the ATR is telling us at that time. So that's all for commodity market, guys. If you have any questions, confused, you can buzz me on Instagram. I'll get back to you ASAP. Hope you trade green the rest of the week. See you guys in the next video. Take care.